Welcome to Insight with Savvy and Sage. My partner, Chad Tongo. I'm Rob Brinkman. So, Chad, what do you know about simulated trading?
That's an interesting question. When I
That's
think
why I
of,
asked, Chad. That's why what I do. I ask interesting questions.
well, I'm glad you asked because every word or every sense of simulation, it brings me back to some sort of a game or some sort of something that assimilates a real thing in the real world.
Yeah, yeah.
Um, Golfing, right? A golf simulator. So that's what I'm thinking simulation is.
Yeah. So, Dylan Elchami is created this awesome platform, and he started with this idea of doing simulated trading,
Hmm.
and then he kind of built from there and actually helped people, right? Because if you don't know what you're doing, then all you're going to do is lose money, right? And next thing you know, you're out in the street. So he has a real heart for helping people, but he's really bright as a trader, but also as a tech guy. So this is
Hmm.
going to be a lot of fun interviewing. So let's go ahead and bring him on board.
Awesome. Excited to hear.
Dylan Alchami, E8 Markets. Tell us what E8 Markets is, because the story of how you got started is really interesting. But in the beginning, what is E8 Markets?
E8 Markets is a platform that was designed to empower traders globally. So initially, we started the platform with the idea, let's start a proprietary trading firm. Let's give opportunities to people in our community. So there was no, in the beginning, we didn't plan to do any marketing. We knew these chat rooms and communities we were already in. Let's do something for these traders where we can enable them and in return make profits with them. So I was having my first child, and the trading life wasn't going to be my my mental model of how it was going to be having children. The trading life wasn't going to fit into that too well because I was waking up at 3 a.m. I had siblings and family members, and I saw their journey. I wasn't going to be in control of my time to do things like that because I was waking up at 3 a.m. because the forex markets are really active at the London Open. So I'd get up at 3 a.m, spend an hour getting my mind right, having my coffee, getting energized, and then I'd trade till like noon. Um, and yeah, I knew that something needed to be more scalable, right? Because I have a family coming, I need more time. And then also, I had a passion for helping other traders that might have been in my position. I was fortunate with my upbringing that I had opportunities around me. So I got into real estate development, and that's how I funded my trading accounts. Most people, most people don't always have those opportunities around them. So they might be working a 9 to 5 job that's paying $15 an hour. It's not going to cut it to fund your trading account. You need lots of money, or you need a little money with lots of leverage. And the lots of leverage part is not sustainable. So I realized that that's an easy way to do good for a moment. You think you got it, and then you blow up. So I realized there was a, a, a need to bridge retail traders that needed access to more opportunity, which is larger account sizes, um, and a platform that would help guide them what to do with that money. Because I went through hundreds of thousands of dollars in my beginning of my career, trial and error, learning myself. I was self-taught, and there wasn't anything like this on the market. You at that time you just like, maybe I'll get to Wall Street one day. But then how do I do that? Do I have to go to some special? Do I have to go to Wharton School of Business, or what do they want to see? And if you really like trading, you definitely don't want to go to school and do the traditional route. Because once you get hooked on the markets, you're like, this is it. It's almost like a sport. I compare it to like F1 racing. You're addicted. You want to be in that cockpit at all times, getting better and practicing. And so going to read books about something that's not on subject, I knew that's not going to resonate with most traders. So kind of past experience helped us develop this platform. And as we went through the process of the launch of the business and developing it, we realized, this isn't really a proprietary trading platform. This is more of like an evaluation and training platform, training, not trading, that gives traders the opportunity to develop a skill But then there's the backside on our end. Okay, what are we going to do? Because now we're shifting more into this educational, experiential learning experience for them. How do we monetize that? So there's fees. So we took the route of developing the tech out so much that those fees would make sense for them to get involved with the platform. So there's fees that we make money on in the front end. And in the back end, now we have all this collective data. Maybe all these traders aren't ready to be professional live traders with someone else's capital, but they do provide something, right? And that data we give to data analysts to extrapolate whatever alpha they can. So whether traders are winning or losing on our platform, the whole point is for them to develop. And then on the back end, we have to do something with that data. So we became more of like a data aggregate of thousands of traders worldwide. And we're in the process of developing pretty successful algorithms. And then the later stage, the plan is to take that and license it to high net worth individuals, but not, again, going back to the original, why did we start this? We don't really need to only empower high net worth individuals. So we plan to license it to anybody. And that's why we don't want to go just the traditional hedge fund route with this data. But if you have an interactive broker's account or wherever we decide to put that algorithm on, connect through an API, and you have $1,000, you can use this data that we're generating these trading signals on in your own account. So the platform has evolved. It started out always to empower traders. We thought it was going to be a proprietary trading model, and that model is still around. And we still have a separate company where we will sponsor traders, but 99% of the platform is a simulated markets company for people to just learn, get experience, and then they start earning rewards in the process.
So I want to circle back to that data aggregation component, but it's summer of 2024. When did you launch your very first platform?
October 2021.
Okay. And so, just from experience and also just how you're speaking about your platform, trading is kind of a lonely business, right? I mean, you were mentioning it's one or the other. It's either the institutional Wall Street model, which is you're in trading pits and around a bunch of people, or you're just kind of working out of your house and learning as you go, because you're right. There is no course to take. You did it the hard way by teaching yourself, but now you're providing these tools. But at the end of the day, is there a component of what you do for that person that kind of feels all by themselves? Because remember, this is real money at risk. They may make a bad decision. They may not pay their mortgage next month.
Right. So naturally, I find there's two types of traders now in this space of social media, online, the online world that's grown, like crazy in the past 10, 15 years. I would say that most true traders at their core that love this, they might be social extroverts, but they are very introspective. So they might like to go and hang out with their friends, but during their work, they're very introverted. They usually tend to like to meditate, exercise, do those things that make them better. That's one type, I would say, like the core trader. Then there's the other trader who is not so introspective, but they more need the spotlight on themselves. And I don't personally haven't met too many that are social media influencers that are actually good traders, right? Because they use my platform. So they have a huge 200, 300,000 followers. I'm not saying all of them, but majority of them can't actually trade. Typically, the people that stand out as traders are very methodical. It's almost like a martial art. They're very disciplined. They're very focused on their craft, and they don't really have time to manage a social media account and be that social extrovert in their day-to-day life. So, but what's interesting is chat rooms play a huge role in the trader's journey. So when we launched the platform, we when I say we, I had a core team from the beginning. We built out all the tech together. I have a partner in this. He's managing all the software. He's the architect of what you see on the front end of the platform, and he helps build everything on the back end as well. Um, when we started this, we said, how do we market this? We're building this platform, but what are we going to do? And of course, we like get on Google and how to market things, YouTube videos, and none of that helps you. None of that helps you. You got to kind of learn as you go. Um, but there are people that launch things and they know exactly what to do from a marketing perspective. But what we had on our side was we were involved with all these chat rooms on Telegram. Majority of it was on Telegram back then. Now there's Discord and all that. I haven't gotten involved with those communities so much, but it was about 3 or 4 core channels on Telegram. There were some Facebook groups. But during your day to day, you're sitting in your office for 6 hours, 5 hours, 10 hours, 4 in the morning, to noon. Some traders are at midnight to 4 in the morning trading Asia sessions. So you don't really have a chance to like be sitting at a coffee shop, and you don't want to be. But these chat rooms are your way of communicating with people, building camaraderie. You build little communities through these chat rooms naturally. You get more involved with them. You find internet friends. A lot of you end up trading together. Me and my partner, and on this venture, we were first trading together for 3 or 4 years before we started this together. And we just found each other. He's across the world. At the time, he was in Bali, and I was in Texas. So, and we're both introverts, right? But there's something with this layer of internet that brings out the extrovert and the introverts, where you feel more natural when you're just typing, communicating. You can still, because you can turn it off. I think that's the thing. You're not like at a bar or at a coffee shop where you can't turn that off. If someone walks up and talks to you, you look a little weird if you just shut off and do what you need to do. But on
Just so you
the
know, I do that to Chad all the time. He'll start talking, I'll just literally walk away. So.
yeah, exactly. You can't do that in like a open setting, but when it's your computer, you have the chance to work on your craft, do what you need to do, go offline for a second. No one questions it, right? Like you don't
No.
respond to a message. No one asks you what were you doing, like, and you don't have to tell them I was in the bathroom or I was meditating for a second. Oh, I
Right.
needed to take a step back. I need to handle something, or I was focusing in on this trade setup, right? So I think that it's a place where these traders gravitate towards, and that's the only real sense of community they can have with this craft. It's an individual sport, right? So you're not usually working on teams to do things, and that gives them an outlet. So we had that on our side. We said we know these communities, we're in them. That's where we found each other. That's we could name thousands of people just like based on usernames that we knew. So we just went in and dropped it in the chat room, said, hey guys, this is a new platform we made. And when we launched, what was out there on the market was so inferior to what we launched, because we came from a trading perspective, from knowing these other platforms that were available, and we fixed a lot of the kinks. We made things a lot simpler. We made the user experience so much better. We built our own tech when most of them kind of just had like a back office that was, I wouldn't, like an Excel sheet almost, or an Excel sheet mixed with a little bit of a PowerPoint. So you could see some visuals, but not much. And we came out with like, boom, here's your trading dashboard with your fighter jet view. Plus the experience is like you're in a fighter jet. Everything's quick. As soon as you sign up, you can start right away. You don't have to wait 24 hours for us to go through. We started doing automated KYC processes. I think a lot of people still in the market, and a lot of companies still in the market, they do manual KYC. So it's like you pay, and then 24 hours later, someone emails you, okay, you're approved. We kind of just had a great software engineering team, and we grabbed every piece of tech plug-in, and then what wasn't available, we built ourselves and made it a seamless experience. So we got lucky, and we didn't have to market at that time. Now things are getting more saturated. There's white label tech companies that kind of plug and play our versions of dashboards, and hey, we'll sell this to you. Give us your soul and we'll let you use our technology. Those companies aren't that profitable, but they're still able to get in and make a little profit, so they're motivated to do it anyways.
Right.
So that's really interesting. First, I can 100% relate with the introvertness of me, because that's me. I'm a massive introvert. and you can't tell. But I have to put a different hat on every time I speak with people, right? Because I just enjoy being in my own little kind of cube and function in it. So on that note, you had mentioned simulated. Could you elaborate a little bit on what simulation or simulated means and what that environment looks like from a non-trader perspective?
Yeah, so from a non-trader perspective and from a trader perspective at the same time, simulated simply, we are basically taking a real live market feed, getting it fed from the same liquidity providers that would be providing those feeds to brokers. The only thing is we're not connecting them to live order books. So it's reality, but it's not reality. So you're actually trading the same feed, you're getting the same executions. We try to mimic everything to be exactly like a real live market account. However, you're not getting those fills actually in the live market. So everything is it's I'm trying to think of a better word for simulated. It's virtual executions. They don't go off into the order book. They don't go to the banks. They don't move the markets. However, the way you're experiencing it, it's the real world.
Got it.
This is going back to the data aggregation, right? So, one of my previous companies, we had about $44 billion under management, and we were covering all the asset classes. And one of the asset classes was small cap growth managers, which, if you know anything, really, you follow that, you could be a really successful small cap growth manager. The problem is, the more money you get, the fewer stocks you can buy, right? Because you have so much money, you start putting positions. You're taking too large a position in the companies you want. So we were always on the lookout for a small cap growth manager. So we're constantly interviewing them, and they would all come with these algorithms, all this back tested algorithm that looked awesome. I mean, how can you argue with it, right? But then there is a difference between back testing and real life, right? Because you can say, well, this is what the algorithm's going to do in this specific situation, but emotions do come in play, right? And so that's really where the back testing doesn't work. Whereas your simulation, so what are you looking for? Give us some examples, not specific people, but specific instances where someone was being successful and you were able to help them or enhance them or actually move them into a different level of success because of what you were seeing.
So when it comes to exactly what you said, the back testing never reflects reality. When we were developing the original models for our algorithms, we'd have these data scientists present us with back tests like, okay, I've plugged into all your data, I'm getting fed hundreds of thousands of trades a week, and I'm doing something with that data, and this is what the back test is showing. We're getting like 150% returns over the course of a year, like 150% annually. It's like, wow, that looks great. But I never got excited about that because I knew the back testing is back testing, right? I can go on a chart and mark up what happened in the past a million times and say, oh, if I did that, this would be a successful trade. When you get into reality on your personal back testing, yes, the emotions come in and everything goes out the window. But what's beautiful about doing things through an algorithm is once you program that algorithm on what cues you want it to look for and how you want it to execute, it does that. And we've gotten to the point where all the trades that come through our platform are feeding into this specific algorithm. It's spitting out 7 or 8 trades a day. It's winning like 5 out of those 8 trades. And sometimes it's 10 and it's winning 8. It's very accurate. They're not huge wins though. It's not like a high frequency thing either. But they're open for a few hours, those trades. What it's looking for is pockets of, let's say, simulated liquidity, right? Our traders will all be executing in one area. It'll have cues to look for what they're doing. And if the metrics add up on the other data that's coming into the platform, it will execute with them or it'll execute without them. So it'll go the other way because sometimes they're getting stop losses hit. Sometimes they're hitting take profit. Sometimes they're executing orders on entry, market entries, pending orders. So it takes all these different order types, all these different execution types. I can't give away too much more information because then it'll be letting someone onto our clues, which I'm sure if you get smart data scientists, they can figure out similar things within this data that we're getting. But what's great is it doesn't matter if our traders are winning, losing, doing anything they want on the platform, because it takes every bit of that, and it's not following one of them individually. It's not dependent on this guy's emotions for the day. It's dependent on the collective whole of the group, and that really leads into like why we named the business E8. When I was into trading, I was really into Fibonacci levels and how everything in the world is connected, and the shape of a seashell, the measurements are connected with the measurements of a tree. Many people don't know that, but even if you look at a sculpted vase, those measurements will all add up to some Fibonacci level, and that's why the human eye finds certain things aesthetic, like the clouds, the trees, the sun, the sand, the grains of sand. It all adds up, right? And so we chose the name E8 because it's a theory in physics of basically the Fibonacci theory and how everything's interconnected in the world, kind of like the butterfly effect. So that's become really cool to see how these algorithms are actually taking in this data, because it's a collective whole of the group. It's not just what one person's doing, what an individual trader might be winning one day and then he's all of a sudden losing. That's the hard part about proprietary trading. But what's cool about what we do is it's independent of all that. It doesn't have emotions. It simply looks at what's happening and makes a decision based on that. And so far, not in back tests, but in our live trading accounts, it's been doing really well. So far we haven't had a losing period of trading. So it's promising.
Man, that's awesome. So, you had mentioned earlier on our conversation, um, there are people or firms out there that are popping up that are rather aggressive, in terms of how they're marketing things. What is your strategy in continuously ensuring that E8 is at the forefront, of all this noise? And then I think more importantly, longevity is the key to something like this, especially from a community perspective, right? Like how are you guys continuously supporting your communities? Because what you guys have done over the last, 3-4 years has been rather impressive in nature in terms of the aggregation of users that you guys have put together in such a short amount of time. So, what is your strategy getting ahead of the game, and then, longevity and keeping the community in such a robust state?
Really, it's a culmination of one good decision on top of another, and they start adding up, and over time, it's undeniable. You can't look back and say, "Oh, they tried something bold and it didn't work." We try not to do things in that sense, right? Um, sure, we have some learning curves at times, but on the surface, you don't see those learning curves. Those are all internalized, and they don't come out onto the brand, and no one knows what's happening. There's challenges with running a business, and I think a lot of the competitors, they were also traders, but they weren't traders that also ran businesses. So I had multiple businesses before this. Um, Real estate development, just developing a property, is an entire business times 10. You've got every stage of the permitting, of the planning, of the visualizing of what's going to happen, and then the execution of that. And then you've got 100 different hands touching that project to get it done. And it's similar to this. You've got the traders, you've got the software engineers, you've got the trading platforms, you've got the website and the front end engineers, you've got the payment processors, you've got all of these moving pieces. It's a full project, and it doesn't just like, okay, I got the website domain and I got these people to provide me technology. Now let's push the button and go. It doesn't work like that. And then also, I think staying true to who we are and what we set out to do from the beginning and not deviating from that. We came here to empower traders, make the experience better, be a reliable source for them to lean on, and kind of just be like a beacon of speed, stability, and opportunity for them. So, and we just stick to that. And it's a lot of these new companies, they also don't do math, right? I'm not the math guy, but I have people on my team that are really smart and really good with statistics, right? So they'll come in and they compete on trying to edge out your model and make theirs cheaper, make theirs easier to attain. And I've always been the guy in the chat rooms. I don't get in the chat rooms anymore, but at the beginning I was. Traders will come and say, hey, make it easier for me to pass the test and get to the rewards stage. And I would say, what good does that do for you? Like, and then they'll push back. Well, of course, you just don't want it to be easy for me to get through, right? Because you just want my money. And it's like, no, we set out to make you a disciplined trader, right? So if I give you more drawdown, if I give you more money to lose and make the profit targets lower, on the surface to you, that's great, right? Then you go into the real world, you never make money. You're never going to be, if I never take the training wheels off and just let you keep falling down, you need the training wheels before you can ride the bike, right? So these drawdown parameters, these targets and all that, they get shifted and changed by these new companies thinking, oh, if we offer some better edge to the user, they're going to come to us. And they do. And then they end up not paying the user. So then who lost? That user thought, this guy doesn't have training wheels. Oh, but I fell down. So I think a lot of it comes to staying true to who we are, not jumping at changes just because they're forced upon us by competitors. And sure, that hurts our bottom line, right? But then we go back to, okay, we're sustainable, we're stable, we're reliable, we still execute with speed, we still provide the opportunities, and there's still tons of people that come to us and appreciate those things. Sure, the short-sighted trader might say, hey, these people care more about the trader. And sure, you may think that, but when I did these evaluations and stuff with other companies, it was a standard. There was, you make 10% and you can't lose 10%. That's it. So when they come in and say, okay, you just have to make 8% with us, but you can lose 15, you think, oh, that's so much easier. In the real world, if you do that with your trading account, you're not going to climb back out of it. If you go down into 15% and you can't even attain 8%, chances are you're going to keep going down. And then to recover that 15%, now you need 30% to just get back to where you need to be to pass that test. So we just run all the models through our minds. We don't rush. We don't change things quickly. And people think like, oh, they'll message us, oh, you should do things like this firm. You should do things like that firm. We've just stayed focused in our own lane. We kind of just put the blinders on and ignore everyone around us.
Right. That's another example of people that don't do math. They go down 15%, not realizing they need to do 30% because their principal's a smaller value, right?
Mm-hmm.
And they need to 30% to get back on top. All right. So it's obvious that you're sincere about helping people and the way you built the platform. Yet you mentioned earlier, you kind of have on the other end, the more institutional stuff, the hedge funds, because you continue to produce these kind of returns. And I'm assuming these are pretty non-correlated in a lot of aspects, which is highly appealing to Wall Street and the
Right.
hedge fund. So kind of give us some insight there. How are you going to nimbly move through those opportunities in the future?
Yeah, so that's the great thing. They're completely non-correlated to any market trend, right? And that's why we love foreign exchange. The foreign exchange markets are always there. Currencies, while in today's world, they're not stable, destabilizing, all that, they still tend to be pretty stable compared to an individual stock or an individual company or even an index. Or I would say it's more, currencies operate a little bit more like gold. They don't go up like crazy, even though gold's been going up crazy right now. Typically, they stay within ranges. They're more predictable, and they're highly liquid. So it's the most liquid tradable market. So
Yeah.
if we were doing, again, small cap stocks, like you said, you can only do so much, right? Maybe after $10 million in capital, those strategies aren't going to work anymore. You're going to be moving the stocks around like crazy, whether you're shorting them or longing them. And there's just not going to be the liquidity there to handle that. Or you might not get fills. With Forex, if you have like a regulated, reliable broker, you'll know you'll get the fills. You know that you're not going to, unless you put $2 billion into the dollar, probably still won't. But if you put $2 billion maybe into like the Swiss franc, you might start moving things a little bit. The market might feel those movements, but still, you have a lot more runway to work with when it comes to capital. Um, so that means we can license our data out to a bigger capital and a lot more people, right? Because once you get to 200, 300, 400, 500 million, even a billion, these markets aren't going to feel it because central banks, small banks, big funds, they're moving money, very liquid. Coca-Cola is moving billions of dollars probably a day between their sales in Japan, their sales in Mexico, and wherever they want to settle that currency. So you have more opportunity to work with the liquidity.
Hmm.
And on top of that, you don't care if the market's going up or down. In the S&P 500, for example, right now, you'd be a fool to be going short just with what we've been seeing the past year, 2 years. Just buy every dip. And there's not much edge in that to go present to other investors. Like they can do it themselves.
Right. Not a lot of alpha there, right?
Yeah. So with what we're building, if something that could just make a steady 4 or 5% a month, that's all we're aiming for, and it's consistent and it's independent on what's going on in the world, then I think you have real value there for investors.
Yeah. So, I mean, obviously, there are, and you and I have had this conversation before, there are really wealthy people that will just, because they have so much money, for them to net out 3 or 4% a month, it's because of their volume, they're able to be able to do that. Does there come a point where you're able to start pooling assets because you have this penchant to help the smaller person? Is there an opportunity to help the smaller investors? Is there a pooling opportunity?
I have the hedge fund set up, and I can set the limits on what the raises are. I could open that up to tons of people, but my idea is just let them license it. Hey, we've got our account set up at Interactive Brokers. We have the hedge fund there for people like your mom and dad that doesn't want to manage fund. They don't want to get in, log in, and disconnect algorithms or turn off the signals when they want to. But if you're younger and you're savvy with the internet and you get in and log into your account, just pay a licensing fee, which will be dependent on how much capital you want to put onto the algorithm. Pay the licensing fee and you control everything. I don't need to manage it. You can turn it on or turn it off. Simply click the disconnect on the API. You won't be trading that week. You want to go on vacation, not think about it, or you want to go on vacation and keep thinking about it and let it just run and make money for you while you're doing nothing or doing whatever you want to do, then it can do that. So that's kind of the idea behind going the licensing route, where if you have $1,000, I don't care how big it is. If you have $1 million, great. You put as much as you want in your brokerage account, and the signals will just keep feeding in through an API.
Yeah.
Yeah. So,
Right. So,
on the hedge fund side, you had mentioned you have it set up. Is that live for you guys to also execute things on from a real life like market perspective, or is that something that's simply just you guys are running data through?
We have the hedge fund set up just really to access more. There's certain levels of access that you get. So you have to be an ECP, which is an eligible contract participant, to get access to certain markets that the retail investor can't get access to, which is trading gold and silver metals on leverage. Without being an ECP, you can't, and that's a minimum $10 million total net assets. And then hedge fund just takes it to another level. Once you have the hedge fund registration with the SEC, brokers, like I go back to Interactive Brokers because that's who we prefer to use, they open up their world to more leverage to you, more opportunities, just more tools in your toolbox. Growing up, I always wanted to have a hedge fund. And then you start doing the math and then thinking about what comes along with those big numbers is typically a lot of people to make it make sense. And then you start realizing, oh, wait, but I'm an introvert, right? I like to trade for me. I don't want to be answering the call to this guy that put $5 million in and wondering why he only made 2% and not 6% this month. And typically high net worth, not all, but a lot of them are antsy and they want answers. They want, they want to know what's going on. So hedge fund was just part of the plan when I was younger. And what do I see myself doing when I'm older? So I just checked the box. I just ticked the box. Hey, here's the legal fees. Here's my thesis. Here's what we want to do. We have it there, but it's in an incubator stage, right? So what we're using it for now is to just run live trades using the algorithm. It gets audited by a third-party accounting firm. It's got all the compliance set up, so we can't be playing games or anything. It's registered with the SEC. Then I can turn that over, make that public to anyone that wants to license the data.
Got it. Makes
So
sense.
that's the hedge fund has evolved to be more of a incubator for ourselves, just to prove the performance. Maybe when I'm older and my kids are out of the house, I'll launch the hedge fund because I don't have a headache here. So I'll want to bring on a headache outside of the house. I don't know. We'll see. But for now, there's no plans to actively raise through that hedge fund at the moment.
Right. So we started the conversation off. You're a trader, you have one child, and you're trying to balance the hours. You just had another baby, so you have three?
3, yeah, all under 4 years old or 4 years
Yeah.
old and younger.
Yeah. So you're just most of the time you're sitting around twiddling your thumbs because you're bored to death because you don't have anything to do, right?
Yeah. So I have to get my hands dirty and start registering these hedge funds and going through the legal processes and building out new tools for the website, and because I'm bored.
Yeah. So for someone watching this that's intrigued by this, wants to plug in, they just go to E8 Markets, right? www.e8.com or e8markets.com.
e8markets.com. Yeah.
e8markets.com. Okay. All right. Well, it's going to be exciting to watch you on your continued journey. I really do appreciate your candor about how other competitors, they see all of the success you're having and they think, well, I can do this, not understanding all the pain and toil and expense and entrepreneurship it took you to get to your point. And that's why you are continuing to be successful. And these other competitors, they show up and they're just flashing the pans and they leave. So it's awesome. And we really appreciate your time. Thanks so much, Dylan.
Yeah. Thank you guys.